Okay, so looking at personal finances and starting off with income tax. So if you go on the government website, it will tell you what the income tax is for each year. And what we're going to be most interested in is this section here. So your personal allowance, your basic rate, your higher rate, and an additional rate. And these are all have a percentage that goes with them, which is what you're paying for each band. So if we get rid of most of the information and just leave ourselves with the band information. Okay, so if you are a person who earns anything up to 11,500, you pay no income tax. If you are somebody who earns, say, 12,000, then that 12,000 is split. So you get your first bit from 0 up to 11,500, and that is your personal allowance, and it is taxed at 0. So personal allowance is 11,500 times by a tax of 0, pay nothing on that. You then have the next section, and that section is at your basic rate. So to work out how much you're paying there, you've got 12,000, so we've got 12,000 take away 11,500 because we've already accounted for that bit. So that will give us £500. So that next section at basic rate, which goes up to 12,000, we've got £500 in, and our basic rate is taxed at 20%. So basic is going to be our £500, and we are going to times that by 20%. So we use a multiplier, and so 20% of £500 we are expecting to get at £100. So if you're a fairly low earner and only earning 12,000 a year, you're only paying £100 in tax. The next bit where it gets a bit higher, so people earning over 45,000, they're not just going to pay basic rate, they're going to pay higher rate as well. So if we get a new person, and our new person earns 50,000, then instead of earning that first bit, they're going to earn 50,000. So our personal allowance is going to stay the same, but we are going to need slightly more on our basic rate. So if we get rid of that, our basic rate only goes up to 45,000. So our next chunk is only going to go up to 45,000. So for that, we're going to need to work out how big that bit is. So we've got 45,000, and we are taking away the 11,500 because we've already accounted for that. So that's going to tell us how much money we actually pay basic rate on. So from a calculator point of view, we've got 45,000, take off our 11,500, so that gives us 33500. So we are paying basic rate on that much money. So that is going to be times by our 0.2 because it's at 20%. So we can times that by 0.2 and that's going to be 6,700. So this is the bit at basic. But our person earns more than 45,000. Our person earns 50,000. So that 50,000 is another jump up. So up to 50,000. So we need to find out how much money we've got there. So for hire, because it goes over the top of this, what you'll find is anybody who's paying higher rate tax is going to pay this 6,700 at basic and then pay higher on top. If they don't pay higher rate because they fall somewhere in the middle of basic, they'll pay a fraction or a part of this amount. So our higher rate, we need to find out how much money that's on. So we've got our 50,000 and we're going to take off our 45,000 because the 45,000 was accounted for in basic. So we're left with £5,000 that we are going to pay higher rate tax on. So higher rate tax is 5,000 times by higher rate tax is at 40%. So that's going to be times by 0.4. So we have 5,000 times by 0.4 and that's going to give us a tax bill of £2,000. So our income tax that we are going to have to pay is made up from your personal allowance, which is nothing. So your income tax is going to be nothing. And then we're going to add on the amount of basic rate tax, which was 6,700. And then we've got to add on the bit that was at higher rate, which was 2,000. So that's going to give us income tax payable annually. So our income tax is going to be £8,700 per year. If we need to know this monthly, we can divide it by 12. If we need to know it weekly, we can divide it by 52. But for a higher rate tax person, you've got the slice at personal allowance, your next slice at basic, your next slice at higher, and the higher rate goes all the way to people who are earning over 150,000.